Hello guys, welcome back to the Capital Traders Group channel. Now today we'll be discussing an interesting topic that's been on a lot of people's mind. Now in essence, it's does smart money concepts work on crypto? Now smart money is a term that is used to describe experienced and investors who make informed decisions based through research and analysis. Now in the crypto world, it's essential to understand whether the principles of smart money apply and whether they can be used to make profitable investments, right? Now, in this video, we're going to explore this question and provide insights on how smart money works in the world of cryptocurrencies. So let's start by defining what I mean by smart money and smart money concept. Now, smart money refers to institutional investors. This is hedge funds, insurance companies, anyone with high net worth individuals who have the knowledge and experience and resources to make well-informed investment decisions. Now, these investors often have access to research tools and a deep understanding of financial markets, making them much more likely to make profitable trades. They also have a vast amount of liquidity to move the markets, which is where manipulation comes into effect. And this is what I'm going to cover in what SMC in essence is. Now, in the world of crypto, we can see smart money in action. For example, when Bitcoin was first introduced, smart money investors recognized its potential early and bought in before the price skyrocketed. The same can be said for Ethereum and other successful cryptocurrencies. Now, however, the crypto market is notoriously volatile and unpredictable. Investing in cryptos, in particularly, carries a much more significant risk. Okay, despite this, smart money investors have found ways to mitigate this risk by using strategies, which I'm going to be going through momentarily. Now, one example of smart money concepts, right? I'm gonna break down in depth. But first, what we should understand is what is SMC. Now, SMC is something I've seen a lot of, become a lot more popularized in the past 2 to 3 years. Okay, SMC in particular has been given different names: institutional, ICT, whatever you want to call it. It's been popularized a lot more in the first 2 3 years. But let's break down what exactly SMC is. Now, if you already have a good understanding of SMC, I'm going to break down what exactly works and what doesn't. Now, I have 6 years of experience in the market, and I also very vastly been trading crypto and BTC for the past about a year and a half as well. I made plenty of videos on BTC calling the market bottom and tops the pre-bull run, so you can feel free to check that out. Will be my first 2-3 videos as well, so feel free to check that out as well. But in essence, what is SMC? Now, SMC is a variety of different things. I don't personally trade SMC, but I do use certain elements of SMC in my own strategy and my plan. Okay, so I'm going to show you exactly what works and what doesn't when it comes to trade SMC, at least when it comes to being applicable to crypto. Order blocks. Do order blocks work in crypto? Yes, they do. Okay, but this also comes down to the execution. Okay, order blocks are now mainly due to the popularization of SMC can also be manipulated very vastly. So there's a certain elements and plans you must have to understand what a valid order block is and what isn't. Okay, but I'm not going to cover that in today's video. But order blocks, yes, they do work, and I'm going to show you examples of these each working as well. Liquidity. Now, liquidity is variable across all markets, right? Stocks, FX, equities, etc. Right? So liquidity is in essence the oil that makes the engine run in the markets. So liquidity is of course very, very important when it comes to crypto as well as all markets. So yes, liquidity is and can be used when it comes to trading crypto. Manipulation is, of course, again, same thing. As long as there's institutional money involved in a particular market, which in crypto it is, manipulation is very ripe, right? And it always will be. As long as you understand how to identify the manipulation, then you can only then you can capitalize off it. Okay, so yes. Thirdly is order flow. This is something I use as well. Order flow is very, very valid in crypto, but I only use it when it comes to lower time frames. I don't use it on high time frames, mainly because, again, it doesn't give as much perspective when it comes on the high time frame, on the higher time frames, and can easily be manipulated. But on the lower time frame, if you can understand how to identify order flow, then you can catch very, very nice entries before you see a pop or in essence spike in volume in the market, at least when it comes to crypto. Okay, so yes, order flow does work. Now, timing does not work, not at least when it comes to crypto. Now, for example, if you've traded FX, you'll understand there'll be certain volume squeezes or spikes in volume when it comes to London Open or New York session or London and New York crossover, which is something which is a window I personally like to trade, mainly because there's a lot more volume, but that only applies to the FX market, right? In crypto it doesn't. Now in crypto you'll see squeezes in volume a lot of the times during Asia session, and sometimes it's just random, right? You'll see it a lot of times, they happen at random times. This is mainly, now I don't actually know why, but the theory is that mainly because there's a lot more Chinese influence on crypto in particular, especially when it comes to BTC. I suggest you guys do some research into this, but in essence, China owns, I think, over 50% of the mining and mining farms, so they have a lot more influence on crypto in particular. So I think that is a good reason why you see a lot of volume squeezes happen or volume movements happening during Asia session. Usually in FX, that time is when consolidation happens, but in crypto you see a lot of volatile moves during this time. So timing can be a bit random when it comes to crypto, so it doesn't really work, okay? However, structure does, right? Just like I said before, structure is very important. Sorry, let me just get rid of this. Structure is very, very important and is valid across all markets, especially in crypto. And I'm going to exactly explain how that can be used as well momentarily. And Wyckoff as well. I'm going to show you an example of that as well. Wyckoff was a popularized strategy or form of trading that was popularized by Richard Wyckoff. And he in essence showed how big money or smart money in essence buys and accumulates and sells and distributes. In essence, it's to do with liquidity and manipulation, but in essence how ranges, what occurs within those ranges and how you can identify what's actually occurring. And I'm going to show you an example of this on BTC. But let's go over some what we can call SMC analysis on BTC. Okay, again, this is a bit more vastly a bit more different. But in essence, it has all these elements intertwined within it. All right, let me go on the daily time frame quickly. Let me just move this to the left a bit. Okay, so here, right, on the left. Now, okay, let's look on the left first. What do we have here, right? On the left, we have a form of liquidity. Now, liquidity, again, is not always double tops, right? It's not always clean highs. It's liquidity, different forms of liquidity can easily be a high being formed and then eventually that high being swept before you see a real push in movement. I talked about this in the previous video, so please do check that out. But in essence, this is a clean liquidity sweep. But what do we see before this liquidity is swept here on the right? We see a push, right? A low made in the market and then a clear retracement. But within this tracement, what do we see? We see a smaller form of distribution, right? You have 1, 2, 3 UTAD, right, which is a smaller form of distribution, some Wyckoff theory, which is something I'm going to go through in depth a little later on. But in essence, you can see it playing out. And I made a video about this as well. It's called a three tap strategy, which is I recommend you check out. But in essence, what you see, 1, 2, 3, you have distribution occur, and then you see this low get swept, right? We have a retracement, then we see distribution occur, and then we see this low get swept. Now, right, we've seen clean liquidity sweeps and we've seen distribution, Wyckoff's distribution take place. Now what else can we see taking place? This is what I refer to order block trading. Okay, now the reason I'll say this is a valid order block is me personally, I don't look at order blocks unless they're under forms of important forms of liquidity, and this is a much more important form of liquidity. Why? Because it has also another low to the left. Okay, so this is where I'd call this a clean form of liquidity. If I go to the left, let me just liquidity, let's go on the daily time frame. I'll show up on the left. Okay, this is a clean form of liquidity, mainly because it made two equal lows. Okay, so this is a clean form of liquidity, and I only look at order blocks below sweeps of liquidity because it increases the probability that the order block is valid. But within this order block, what else do we see? So let me go 1 second. Let me go on the replay tool. Okay, within now this is also where I took a long trade. This is something I showed in a previous video. I think I showed this trade again. This trade was shared with members as well. But in essence, what do we see here, right? This is what I refer to as clean order flow. We have a push in price, right, from this region. It retests the lows of this range before we see a structure break here on the left. Okay, we see a structure break to the left, and what does price do? It comes back into the previous zone that broke structure, retested that zone, pushed up slightly, gave internal breaks of structure, retested that zone for a final time before we see. Now this is in essence where last time I took a trade from BTC longs, it was around this region, stops below this low, and I was looking to target this region above. Again, you can check that out. I had MT4 entry and everything on the video, but in essence this is one of the reasons why I took the trade. But yes, order, so you can see how clearly order flow works and can work on crypto as well. So let's go back on the daily time frame. Okay, so that's a clear order block, right, or accumulation occurring after a sweep of liquidity. Okay, so that works too. Now what else can we see being worked here? Now this is another trade I remember taking, but in essence this is another form that comes to SMC trading that I see a lot of SMC traders like to use as well. But in essence it's called power of three. Okay, power of three in essence when you have a range occur, right, and then you have manipulation, which is a range, right, this is range bound price action. You have manipulation to trap in sellers who breakout traders who who think price is getting to push down lower after consolidation, but then price makes the other movement, right? It's called power of three. You have accumulation, manipulation, and then expansion to the upside, okay? And in essence, it looks something like this. If I just get rid of this quickly. 4 hour, let's just make this a little quicker. But this is what it looks like, okay? And this is another example of manipulation occurring in the markets, okay? But as you can see, it played out perfectly, okay? This is another position, again, shared with members. But look, now you have another form, a high formed, and price, if price fails this region, then we see the push down, okay? Another sweep of liquidity, and price pushes down, right? Or what do we see here? Let me just get rid of all this. Okay, and this is, again, this is another short I took, I believe it was here. I remember I shared this trade for free on the public Telegram channel, so feel free to check that out. Link will be in the description down below. But look, as you can see, price did the same thing. Now here is an interesting trade that I took, and this trade was in essence based off majoritively manipulation, right, and liquidity. These lows are all swiped now. Let me just get rid of all this. Let me get rid of all these highs. Right, on the left now, what do we see? Right, we have a clean lows getting swept. All this liquidity is now being swept. Now, because on the high time frames, again, I went over this trade on the last video, but in essence, the reason I took this trade is lows were all swiped, right? And I understood that the probability of price coming back, mainly because in the high time frame we were bullish, is very likely to at least come back and swipe out all this clean liquidity above, right? This is majoritively trading based off structure, okay, and liquidity, so you can see it works very, very well. But in essence, expecting price to shoot back up, which it did, right? And again, we bought at the lows here, so feel free to check out the Telegram group, because this group, I shared examples of this trade on Instagram as well, I think. But in essence, this is the example of how we've used structure, we've used liquidity, we've used manipulation, we've used order flow, and we've used order blocks. Okay, all things that SMC trade, smart money concept outlines and can clearly be used. Okay, but again, it comes down to how you're identifying these things and how you are understanding where manipulation is occurring. Okay, this usually comes with experience, but it comes with understanding how and where and why price does the things it does. Okay. Again, I recommend you guys backtest these, but you can very well see that SMC does work on crypto, and is very, very much valid. Okay, I'd even argue that it works a lot more easier on crypto than it does on FX, right? Mainly because there's a lot more FX. There's a lot more SMC traders that trade FX, and what you'll understand is if a lot more people are trading a certain way, and the market is seeing SLs being placed against, let's say, order blocks or certain price key levels, it's just going to hunt those levels. It's naturally, because the market is seeking liquidity in order to make its actual moves, okay, the real moves. So that's what you guys need to understand. If one way is being popularized, you need to understand that you need to find your own edge in the market. I mean, look, it's the same reason why a lot of SMC's traders don't become profitable, because they they're not willing to adapt or extend their mindset to understand why the market is doing certain things. So that's why I don't see the point of having such tight stop losses and, you know, having these 1 to 50 RR trade. It's all bogus, it's all stupid. So that's why you need to build your own mindset when it comes to trading in particular. That's why I don't trade SMC. I use certain elements of it like liquidity, structure, etc., but I don't trade solely based off that in particularly. Okay. So now let me show you an example of Wyckoff theory right now in the market. Now, this is my outline on BTC right now. Okay. Now I am expecting this region. I'm gonna show you guys this. So I am expecting this region to get filled, mainly because we have a CME gap that is left to get fulfilled, and right now everyone is, you know, becoming a lot more bullish in the market right now. Okay. So I'm gonna exactly outline what I see. We have a Wyckoff distribution schematic being played out here, schematic 1. Okay. But in essence, this is what I'm seeing, and what I'm seeing outlined in the market right now. Now, this past week, this past 3 weeks actually, we've had very, 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 you know, tight range being occurred in the market. Okay, very, very shallow pushes up, and I think for this reason we're going to see one last sweep of liquidity here, and then we see price come back for to test, which will be the spring or the UTAD, before we see a final flush of liquidity where we start seeing people, you know, calling for 35k or 40k, and I think that's going to be when price comes back down to at least the 25k region, and then potentially back down to the 20k region where you have the CME gaps. Okay, but this is a clean example of Wyckoff distribution, right? We have the buying climax, the UT, the automatic rally, the sign of weakness in phase B, then the second UTAD, the UT, sorry, and then a final UTAD where I'll be looking for potential short as we come into 30k region. So if you guys enjoy this video, please do leave a like and subscribe. Feel free to check out our links and our services in the description down below. Also, guys, feel free to comment on what other video content you guys would like to see. Other than that, I will be updating this particular trade in the free Telegram channel, so make sure you are subscribed to that. But all that said and done, I'll see you guys on the next one. Bye bye.